Well, welcome everyone to episode 12 of the Real Profit, Real Perspective podcast, Cashflow Forecasting. How? I'm Connor Malatesta, and I'm joined by my wonderful co-host, my favorite person to talk to every single week, Ryan Bannister, the owner of One Up Advisors. Ryan, how are you doing today?
Oh, Connor, I'm doing great, man. You are also my favorite other person to talk to on a weekly basis.
Oh, don't tell Kathleen that.
The distinction, I talk to her daily, so
I see. That's how you get those technicalities.
there you go.
I can
You got
see
to be swift.
you've written a contract or two before in your life. You know, it funny enough, it's been a hot minute since we've really done one of these recordings. I know it doesn't look that way from the scheduling, but we actually took a bit of a break here just to kind of see how things were going, get some of people's feedback such as we need to include graphics and things, which, we'll get to that. Someone's got to edit it, and that takes some time. Let's just figure out, when in here have some graphics up and all that. No big deal. Maybe we should hire someone like we talked about, except I'm feeling cheap right now. So this week's episode is something that I know is, I'm going to say, near and dear to both of our hearts, but that's mostly because it's probably the one question we get asked the absolute most is, how in the hell do I forecast cash? So here's my question to you, Ryan. When you're working with a client, what is usually the starting point when they are looking at their cash? How, when you're working with people and it's either onboarding or it's a new engagement, what's kind of the prototypical example of how people view their cash management?
Yeah, great question. And for me, it takes a lot of different forms. So people aren't coming into me and saying, hey, help me plan out my cash flow for the next 30 years. People are coming in and saying, how the heck can I retire? How can I leave this corporate job? How can I hit financial independence, or even bigger purchases or things like that? How can I buy this house? So it takes a lot of different forms for me. And at its core, I think most people are, when they're working with me, they are looking to answer those questions. Like nobody really cares about the details. They care about how I get them to this end point that they want to get to, right? So yeah, retirement is kind of the core of what I do. I don't usually use that term as much. I tend to gravitate towards financial independence, but that's a different thing all on its own. But to answer those questions, cash flow forecasting is the name of the game. That's what I'm doing a lot over here when I'm looking at client files and sitting through meetings and answering questions. And there's a lot of different ways that we do that. It takes different forms depending on what the question is, right? Like the cash flow plan to buy a house is going to look a lot different than for someone who's 2 years from retirement and wondering, like, how much am I going to spend every month? How much can I spend and, still live my lifestyle and not have to change anything? Or, in some good cases, some people can live an even better lifestyle in retirement. So, that's kind of the fun of it. And honestly, why I got into this whole gig in the first place, is it's not a skill a lot of people have, and it's really fun to do.
I mean, I don't think anybody would disagree when we start talking about financial literacy being, not a common attribute of a lot of people. If it was, we wouldn't have as many clients and would probably struggle a little bit more to, find new clients to teach that to.
Yeah.
So let's do this, because I know later on we had kind of talked about this. We'll get into, kind of the business aspect of everything. But I think everyone can, whether they're a business owner or an individual or working somewhere else, everybody, can kind of understand things on the personal level. So I'm going to give you two questions. So the
Ooh.
first question is, for something like a house purchase, for example, how do you approach walking the client through all that so that you can plan things out? And my second question is because you are working with people in regards to their personal finances and their personal living and everything, because we're talking about cash, and we this will probably echo when we had talked about controlling spending in earlier episodes. But the second question is, what are some of the most common mistakes you see? And let me rephrase mistakes as misconceptions, right? So when you've got people coming in and you're getting ready to talk through retirement planning or large purchase planning, what are the preconceived notions people have that are different from how it really works?
Great questions. I think I may end up answering the second one in part of, maybe partially in the home question. But to that first question, I tell clients, when you're looking for a house, who are the people you have to get involved? Well, one of them is going to be a mortgage loan officer from some financing company. And most of the time, they're going to run their calculations. They're going to tell you how much you could potentially afford in a house. When we work together, I'm going to tell you how much you can and you should afford.
Do you mean to tell me that the mortgage broker may not have the individual's best interests at heart when they're looking for how big of a loan to approve them for?
I will give no comment on that. I will say I know some pretty darn good mortgage people out there who are good folks, but it's their job it is their job to tell you, the maximum you could afford in a house. But, you know, across the industry, I would say that no, most of them are not going to have your best interest at heart.
So what I'm
And
hearing is if you're a mortgage broker that knows Ryan, you are amazing and we love everything you do.
yep.
And if you're a mortgage broker that we don't know, um, just because they give you that loan doesn't mean you should absolutely max out the biggest house you can possibly afford.
And like you said, with, financial literacy going into some of these things, that means the same thing to people on its face, right? Like if you get pre-approved for a loan that's $1 million, but you should in reality only buy a house that's like 400,000 or 500,000. Those mortgage payments are going to look drastically different. And that's where the numbers come into play, and they don't lie. So when you're looking at these things, or when we work together to work through them, right? Like one of the tools we use is called Monarch Money. So you may have heard of it, maybe not. It's a great platform. It's, one that I can, as your advisor, have access to look into your accounts and everything. Or, you can also pay for the app yourself. I think it's like $10 a month or something.
Is it
Um,
like an individual, almost like a QuickBooks type thing, or what actually is it?
yeah,
I'm not familiar with it.
yeah, that's the way I usually describe it, as the personal version of QuickBooks.
Hmm.
So like you can just go in there, link your checking account. It automatically pulls in your income, paychecks that hit, expenses, and it across those sorts of softwares, it is the best one I've found to auto categorize. Like it rarely puts things in a wrong spot. There's some things where, like, I don't know, if you're shopping at Target or something and you buy food, like that could be groceries, but it might put it as shopping, small things like that. But um we, honestly, a lot of the time try not to get that granular. It's good for you as the individual to understand that, but a lot of times we're looking at least at the start, at these things from a high level. Generally just looking, sort of back to our rule number one of business. Are you making money? In your personal life too, you don't want to be spending more than you're bringing in, because then in Monarch Money, you're going to see your credit card balance start to slowly tick up, or your savings account balance is going to go down.
Are you telling me that
So
even as an individual, I shouldn't be just steadily maxing out new credit cards and opening up new ones to continue doing balance transfers so that I can only continue making the minimum payments while spending above my means and absolutely not thinking about the impending credit crunch that will happen into the future?
that is what we call a shell game with credit cards.
I can't understand why you would shy someone away from doing something like
Yeah.
that. It makes perfect sense to me. You do that, you continue to do that, and then you either die or flee the country.
Right. Yeah. You make out good either way. So that's, what we start at first in looking like at a decision like that. That's how we figure out that amount you should, I'm doing air quotes for anyone who can't see me, I'm doing air quotes, what you should pay for your mortgage. So someone like a mortgage officer is going to say, okay, max, your debt to income ratio should be about 40%. So your debt payments, like what you're paying on the credit cards you just alluded to, your car payment, things like that, plus your future mortgage, all that shouldn't be more than 40% of what your total paychecks are every month. So for our self-employed folks, that gets a little more complicated when, all your income isn't necessarily just from a W-2 job, but the principle's the same thing. So we look at things like that and say, okay, you have to have X amount for down payment. How do you get there? Like, how much extra cash are you bringing in per month? How much of that can you save to accumulate this big down payment, right? So then we take that. That's the first step. You've got to have your down payment, closing costs, all the other jazz that goes with it. But the next and most important question is, are you going to be able to meet the monthly mortgage from now on for the next 30 years or however long you plan to live in the house? So that's where the real forecasting on that comes from. And, looking at your personal income, seeing like, okay, are you going to get any raises, or is your business going to grow over the next, 5-10 years? And how does that play into those factors? So things like that.
So I've got a secondary question for you that is different from the what are the preconceived notions. So
Yeah.
what about if you're talking to somebody, and this is less of a cash flow forecasting question, and this is just more of a how do you work through this situation? When you sit down with a client and run these calculations and figure out based on how much you're making, this is, how much you've got available, and the conclusion ends up being you can't afford this. How does that kind of go? What's your kind of approach to working through a challenge like that when the reality of the situation is that you may want to do this, but right now as things are, it's not feasible?
Yeah. And that phrase, one, this is going to sound a little cliche, but I hate the phrase can't afford it. From the perspective, that's a scarcity mindset, I think, in the first place. So trying to flip that around to an abundance mindset, how can you afford this? Like, what is that going to take? Is it going to take you like getting a promotion at your job, or going out and selling more business to grow and get to that point? Like, if you need a house now, you've got to kind of make the compromise and say what can we afford? But still with that in mind, like in the future, how can we get to this point where we afford this house that we want?
So really looking at things more from the lens of here's if we want to do this, this is what we need to do for the future, as opposed to a sorry, you're just kind of out of luck right now and you will get nothing and like it.
Yeah, exactly. I think that motivates a lot of people when they can see the number on paper. Like, what does this need to be to make it happen?
Hmm. It's funny how when you kind of contextualize goals into defined numbers, even though it's almost a purely psychological trick, it still does kind of work. doesn't it? When you say, look, this is what you got to do. This, if you want to do this, here's the goal. Here's the thing to work towards achieving. And weirdly enough, when you start to do that, it really does seem to help a whole lot of people when you have those clearly defined goals of, okay, you've got free cash each month of 2,500. In order to be able to afford this, you need to get that up to 3,500 or 4,000 or something, and it gives them something concrete to work towards as opposed to just a vague, you just need to make more money.
Yeah, you nailed it. And not to rant too hard on it, but I think that's why I think that's part of the housing issue that we have at this point, or like, why people feel that home ownership is not attainable. I think a lot of people just don't know the numbers behind it and need someone to work with to help them to get there.
And that's where you come in.
Exactly.
Now, I'm not going to let you off the hook for question number 2. So, on this topic, particularly for housing and all these things, what are some of the. I'm now going to take this one and divide it into 2 questions because I'm in a questioning mood today. So, question part 1 is, what are the most common misconceptions? And then, what are the either biggest or most severe misconceptions when you start looking at personal budgeting and finance and things like that?
We definitely already hit on some of them in what we were just saying with, I can't afford this. I think that's a big one where a lot of people just don't know that they can because they're not tracking these things. Like there's so many people out there that aren't doing a monthly budget, like, I mean, even as in my job, like I don't really track a monthly budget to a super granular level because it's kind of unrealistic, I think. But high level, you should know these things for your household and like your personal accounts. So I think that's a big one is, if you really just track it and look behind the curtain of things, you're going to be surprised. So part 2 of that is a lot of people don't think about their financial goals in general, or they feel that they are just unattainable, like it's some pie in the sky type of thing. So sort of like exactly what happens when, you are working with a business to show them like their true numbers. The same thing happens on the personal side. Like when you look at those, the numbers don't lie. I already said that this episode, and I'm going to say it more probably.
I guess
It's going to tell
we'll
you.
just flash that on the screen multiple times. The numbers don't lie unless you have a really good accountant.
Yeah. And I encourage people to think about your financial goals. And even if you think they're like totally unrealistic, that at least gets you to the point where you can set some in-between milestone that helps get you there and still feels like a win when you get to that point. So those are 2 of the big ones.
So I got another follow up to that. So let's say somebody's listening to this and they're an individual and they don't have a budget, don't really know what's going on with their kind of finances. Money may be coming in, money's going out, and they're listening to this and they've had a dose of inspiration and they're sitting there going, I want to do this, but I have no idea how to get started, how to start putting together a budget. So my question to you is, what would you say to this person as the first couple concrete steps to be able to put together their own budget? What would you tell them to do?
There's a couple different paths you could take. One would be using a tool like Monarch, where you can download the app, pay them $10, just look at it for 1 month. You don't even have to keep the app. Just do it and look at like the last month or look at this year. Just link your checking account in there, see what it auto populates. Does it make sense? Evaluate it, look at it from there. Another path you could take, you could literally just open up your checking account online, look at your paychecks that you've received, put it into a spreadsheet, and approximate your expenses. Like, everyone knows how much they pay in rent or for a mortgage for the month. You might not know your utilities off the top of your head, but I don't know, call it 100 or 200 bucks a month. Like, you probably already have an idea of where things stand for you. You just have to put it in front of you to actually see.
And if somebody doesn't have an idea, what do you think will happen once they kind of lay that all out in front of them? What's the when you're working with someone and they see their personal spending for the first time and it's the first they've ever considered, what's probably going to be the response?
That's one of the best parts of the job. You get to see the light bulb go off in people's heads. You can physically see it when that happens, and it's awesome.
Is it a good light bulb? Because I gotta admit,
Yeah.
I'm thinking of a few times when we've worked with businesses and we start putting that stuff together, and there was a light bulb, but I definitely don't think that conversation uh, was the best that has ever occurred as we laid out and they went, we're spending how much money?
Yeah.
Nothing.
I was leaving that intentionally vague to let our dear listeners interpret that to wherever they're. But yeah, you are right. Actually, a surprising amount of the time, it is a good light bulb. There are certain things in there though where people can say, "Oh man, I didn't realize we did that." Like, I think eating out food is a big offender a lot of the times. I mean, personally, that's a big one too. Like, oh crap, I didn't realize we did this. We just had one nice meal out, and we've already gone over our budget. So,
Did you set your budget like $50 a month for eating out? Like,
I'm talking a nice meal.
Oh, excuse me, mister. I'm going to have a 5-course meal and drop $600 on one dinner. Oh, I appreciate you've got a much more upbeat tone because I'm thinking of the couple times I've had a few clients where we worked with them personally and did a little bit of like personal household accounting for them. And it's one of those where the kind of cynical part of me starts to kick in a little bit, where somebody is asked, why don't you enjoy working at times with, individuals and stuff like that? And it's not that I don't enjoy it. It's just the few times where we have worked with married couples, for example, where we put together personal books for them. And then everything is laid out for who's spending money on what. And then I start to go, do I need to refer you guys to a divorce attorney or what's we'll tell you what, why don't we end the call and I'll let you guys kind of talk this through. My job was to give you the numbers. I'm gonna stay out of the middle of this one. There's been a couple heated ones.
Yeah, that's the interesting spread of things, and whether it's related to my client base or maybe I've just gotten lucky, I don't know. But a lot of what I've found working with young folks in general, and then filtering that down to creators and people in the entertainment industry, a lot of them are making no money at first. So the first month when their YouTube channel pays them $30,000, they're like, oh man, this is more. I made more in 1 month now than I made all of last year. So I find the general response to that has been to not let any of it go. Like, a lot of people I work with are pretty thrifty, and it's kind of hard to convince them, like, you actually should probably go out and spend more money, which also correlates to a problem I see in the retirement space, like with older folks who have spent their whole lives saving this pot of money. So you've finally got your nest egg, and then you go into retirement. Now you find yourself like drawing down on the balance and spending and not saving anything. That's a hard mindset jump. And you can find yourself a lot of the time, like, also trying to help this group of people. It's like, you can go out and spend more. Like, please go spend your money you work so hard to earn. Like,
I'm sure that's got to be an interesting one to come from the financial advisor. Ryan, what should I do? spend more money. I don't. You've got too much. We need to make some of this go away. Also require minimum distributions. Blah blah.
Yeah,
Spend money. It's interesting how that how the emotional component to it, particularly those, I think anybody that's gone through the beginning parts of a business, bootstrapping is the sexy phrase to use. You could also call it just being fucking poor, which I think is kind of a more honest label of in the beginning when you
yep,
don't have those resources, losing that mentality of I'm 1 month away from being broke again can be a very difficult thing to break as stuff gets good. Now
yeah,
I think it's Nvidia who's famous for saying that they always view themselves as about, I think it's 1 month away from bankruptcy, because at if I'm remembering the story correctly, or it's another company, or it's a no, Connor, you've gone and taken four different stories and just blended them together in your head and now regurgitated it. Whatever, it doesn't matter. It's my story. I'm going to tell it how I want. But I do think it was Nvidia where the kind of unofficial model is always 1 month away from bankruptcy, because they had had a period where their first chips, where it was the make or break moment, where the all they had left in cash was 1 month of payroll, and if it didn't pan out, they were done. They were filing bankruptcy and shutting everything down. And fortunately for them, it was a success, and now they're making more money than God. But that mentality of not getting complacent, I think, is really important, whether you're looking at your own personal finances or you're looking at the business, to not just assume there's always going to be a money faucet that you can, draw upon when you're in that kind of build and accumulation stage or in the beginning. Now, obviously, if you're at the end, there is a money faucet. You should be taking that. You've earned it. Go ahead and spend, whatever money that you're not leaving for heirs or anything like that, unless you're
yep.
truly a trust fund baby that just has a literal self-sustaining pot of money that's not going to go anywhere, in which case, the fuck are you doing listening to this? uh you go play or do whatever it is trust fund babies do. I don't know. But for the rest of us that have to work,
Yeah.
I
I
think there might be
find
a
that
couple
issue
clients I'll
like
piss off with
like
that.
what you're kind of just talking about, with the money faucet. And I find that's especially prevalent in business owners, and kind of like taking that step from treating your business as a wallet, like your personal checking account, and not letting that happen. Like that can easily blow up both sides of the equation, personally and business. So I'm sure you have many great stories on that front.
It's funny you mentioned the treating the business like a wallet, because the one thing that I have noticed, that pretty much every new business owner, right, even if they've had a couple businesses before, in terms of, if we conceptualize this as the development of the business owner, right? So you're starting, let's see, this will be the left side, and then this can go. Okay, yeah, I'm reversed here, so I'm kind of doing things backwards. If we consider this as our starting point, and that going forward is the overall development of a business owner, regardless of how many businesses they've got, just about every business owner starts with, if I have money in the bank, I am doing okay. That's it. That is the starting point for every business owner when they start thinking about cash flow. Is if there's money in the bank, I'm doing okay. If there isn't money in the bank, I'm not doing okay. Which isn't wrong. That's not a wrong way to look at things, but it is a simplistic view of what's going to happen with the business. Pretty much everybody starts by looking at the business as their wallet, particularly if you're starting and it's just you, and there's a legal separation between the business and you, but for all intents and purposes, there is no separation. Personal expenses are showing up on business cards, vice versa, and everything's just kind of a mess. Pretty much all of them start there with I'm just looking at the money I got in the bank, and so long as it's there, I'm gonna either spend or I'm gonna take some, and that's it. And that's the starting point. Everybody pretty much, that's our step one, because if you're not looking at the money in the bank, then at that, you're probably not going to last long as a business owner regardless. because you should be keeping track of your cash. And I actually gave this morning, I was given a little bit of a talk, and when I mentioned, viewing cash or whatever's just in the bank, I could look around the room and see quite a few business owners kind of nodding their heads, going, "Oh, I just got called out." I'm like, I know exactly. I know how you guys view it. I was there in the beginning, and I've seen it dozens and dozens and dozens of times. Everybody starts there. Where we go from I'm just treating it as a wallet to treating it like a real business usually coincides with making a phone call to an accounting firm to say, I have no idea what's going on with how much I'm spending or how much I'm pulling in. I don't know what's going on with my books. The next step from there is now you need accounting to actually track what the hell is going on. So Monarch works great for individuals. Generally, when you're a business owner and you've got a business that you're running, you have to use an actionable accounting system. Sorry, there's more for people listening there. You have more overhead as a business. That is just a consequence of how things work. And the first thing you've got to do is figure out, what have we been spending money on? How much money have we pulled in? How much have we spent? How much is our profit? One of my favorite leading questions for small business owners, particularly ones that I know that have been trying to maintain things themselves, is to ask them a very basic question. And I'm sure you have asked this of your clients as well, probably as part of the sales process. What was your profit last month?
Absolutely. Oh, yeah.
Not last year, not what did it say on your tax return. What was your profit last month? And oftentimes, particularly with new businesses or new clients, the answer is, I don't know. I don't actually know how much I made last month. And then we go, well, do you think that might be an issue that we don't know how much money we made last month? Usually the answer to that question is, well, yeah, I do think that's an issue. Because it is an issue. We
Yep.
should know how much money we're making every month. That way we can either celebrate when we see the number becoming positive and big, or we can panic when we go, oh my God, we're losing money left and right, and everything's going to shit.
Mm-hmm.
And usually the answer to the question of how much money or how much profit did you make last month, that then tells me, all right, what are we working from? Some clients will have taken the step and they have an accounting system, they have a QuickBooks, they have something. It might be screwed up. Oftentimes it's screwed up. Oftentimes it's really fucked up because they don't know what they're doing. Sometimes they don't, but we have to get those together because the first step, so for a business, similar to what you had talked about on the individual side, when you look and you talk about a debt to income ratio of 40%, which means basically in layman's terms, for easy numbers, if you got $10,000 a month coming in, you should only be spending $4,000 or less on, your debt payments, which would translate to about $4,000. When you're looking at a business and you're trying to figure out, what do things look like? One of the first things we want to wrap our heads around is expenses. What are we spending money on? The reason why, when you look in the news for these consultants are out there or doing things, or companies announce new cost-cutting measures and stuff like that, is that cost is usually the thing that we have the most control over. And I would ask you a leading question of, don't you also think that that is probably true on the personal side as well?
100%.
It is so much easier to stop spending money than it is to go get more money.
100%. I think the caveat I see a lot is there's sometimes only so far you can reduce expenses.
Of course, you can't cut everything, but I think both of us would be in agreement that usually if you take somebody who is coming to us for the first time, there's a lot of waste in what they're spending money on. Either their
Yep.
meals, stop eating. If you got time to eat, you got time to work. That's the mantra I tell my employees. I'm kidding. That is a joke. Subscriptions. We get nickel and dime to death with subscriptions. That actually reminds me, I do have a gym membership that I need to go fucking cancel because I keep forgetting to do that, and they've God knows how many months they've collected off of my forgetfulness. But things that you just don't realize that, oh yeah, we can do that because now that I see it here, oh my God, I spent how much on Netflix? I'm paying for how many subscriptions? All right, nope, everybody's going to share the password. What do you mean they were trying to cut that down? And you start with what are the known expenses, and then from there start to figure out, okay, what is the absolute necessity of what we have to spend each month to keep things going. The basic fundamentals for both business and personal for cash flow is what effectively is our non-negotiable expenses, the things that must be paid every single month: rent, mortgages, utilities, food, transportation, even clothing sometimes could be a little optional if you work from home. But the bait, you start with the things of, we know we cannot make any changes to this without drastic measures, and that gives you, what if you're an individual or a business, that's your basic overhead. This is how much it costs me to continue to exist. And then from there, we start to figure out the extra stuff. And then we look at, okay, now let's figure out what control do we have over your income. So, one of the biggest challenges when I work with small businesses is we have basically two kinds of ways to get paid. We have one off and we have recurring. You're either going to get paid repeatedly, or you have done one thing, you have been paid for it, now you've got to go find the next opportunity. Even on the personal side, W-2 wages, that is recurring. You can count on the fact, you should be able to count on the fact, that your paycheck is going to clear every month. So every month, here's how much money we've got coming in. And for businesses, it's the same thing. Do we have services or people that we work with where we know that every single month they are going to pay X amount? And this is effectively recurring cash that we can count on being there. For us, and for you as well, bookkeeping work. Every month we do it, every month they pay. We can pretty much be assured that this is going to continue to go so long as the client exists and continues to do things, and so long as we continue to do our jobs.
Right.
That is the easiest to forecast, because you look at how much you got this month, make sure that that's what you're going to get next month. There you go. You're going to get paid every month. W-2 wages. It's not rocket surgery trying to figure out how much, somebody's going to make each month on salary. Even hourly, if you've got steady hours. For a business, if you're either in the kind of work where you do work every month, or you've got those kinds of recurring services, then we can pretty much look at that and say, okay, then we start to look at, recurring versus overhead. Does it pay for it? Does it not pay for it? If it pays for it, well, now we're doing good, because now we can figure out what's our base profit each month. And now we can start to forecast from that and go, all right, cool. This is at the end of the year, how much profit we should make at minimum. What do we want to do? What new endeavors do we want to do? Things like that. And it's nice and easy. Unfortunately, usually the clients that reach out don't have things that are nice and easy like that, because usually by the time you hit that point, you can start to conceptualize what you need to do. So instead, we have clients where their revenue from month to month is anyone's guess. How much are we going to do in work next month? Who knows? Depends on sales. It's a mystery. And that's where things get a little more challenging, and where it becomes really important to understand how much are we going to spend each month? What's the technical term is runway. You can think of it as the runway. You are a plane going down a runway, and the amount of money you have on hand is how long the runway is. And the amount of money you spend each month is how fast you're going down that runway. If you don't have a whole lot of money, it's going to be a short runway. If you're spending a lot of money, you're going real fucking fast, which means you're going for problems.
Yep.
I could make some jokes, particularly relating to some plane crashes that have occurred recently, but I'm not going to do that, because that would be insensitive. And we don't do that here. But if you have a short runway and you're going way too fast and don't have time to get up into the air, you are going to crash and burn.
It's not looking too good.
It's not. It's not like Fast and the Furious, where I believe they had a scene. I don't remember which one it was, where I think they spent 10 minutes going down the runway. I think if I remember correctly, they did some calculations based on the average travel speed of the airplane. That runway was about 10 miles long. Runways are usually not
Solid.
10 miles long. But the idea behind this is, if all of my sales dry up, how long can I keep the lights on, keep people paid? If it's you yourself, your runway is going to be going to be a lot easier to keep that running for a longer time, because you don't have payroll to meet. As soon as you've got payroll, you know you've got obligations. You know that if they don't get paid, you're going to run into some serious problems, right? And that's really at its core business cash flow forecasting and personal cash flow forecasting. Like most things we talk about, it's the same concepts. It's
Yep.
the same thing. Money in, money out. How much do we think we're going to get? What do we want to do? And now, how do we go about accomplishing whatever this goal is? How do we generate more revenue? Businesses just have more moving pieces that are involved when you have to look at marketing and sales and getting your own clients and ensuring you get paid and do the work and quality control and stuff like that. Individuals, you've got, when you're not working with the business owners, if it's just individual, you're looking at, W-2 wages and stuff. And so it's a lot more straightforward, but it's still the same stuff. What do we have to spend? What has to come in? What do we think we're going to do? And then we just look at how that plays out. And then based on those numbers, which, like you said, they don't lie unless you have one of those creative accountants that's in prison for fraud, in which case, look, if you're trying to fudge your numbers to make things look better, it's not going to solve your deeper fundamental problems. Enron still went out of business. I think that comes with a caveat, because I don't want to make sure there's not they just restructured it. It got fucked up. don't get pedantic with me. Like Arthur Andersen got folded into the Big Four after the whole thing. But it follows the same, stuff. And then we just look at, okay, generally a business has more control over what we want to do for more revenue. Are we going to do new services? What does our profitability look like? That kind of thing. That's where you dive into the details, more and more of what's going on. I know I just talked without interruption, I think, for like 10 minutes. So did you have a question pop into your head that you didn't get a chance to ask?
All that was great. That's why I kept letting you roll, man. It was, I think what you ended with is right on point with, regardless of the situation, the principles are still the same. So when you are working with a business, how do you help them figure out like why they are doing this cash flow forecasting? Like how do they identify business goals and the places where they want to take things, if that makes sense?
I think I'm understanding what you're saying. Are you kind of referring to why they wanted to look at it in the first place? Is that?
Yeah, that, and I think coming from sort of my individual perspective of, a lot of people aren't thinking about their financial goals. I think a lot of people in business can get stuck on the fact that the goal is to just continue to make endless boatloads of money, right? Which it is at its core. But what do you do with that money for your business to continue to grow? Like, I guess at that point, like reinvesting into your business or taking distributions or buying another company to help you continue to grow, things like that. How do you bring those into the cash flow forecasting process?
It's an interesting question, because a lot of that, so to kind of start with, a lot of that ends up dependent on actually the business owner themselves, or the decision makers, on what their actual individual goal is with the business. Some of them are, I want to sell in 5 to 10 years. Some of them have I only want to hit a certain revenue level because I know to go past that, it's more work than I want to put into it. And I want to be able to go fishing on Tuesdays and Thursdays and not continue to slave away building something up at this point. Others are, I want a full bore as big as I can, grow this as much as I can. And, the sky is the limit. And that one is interesting because just starting from those kind of three potential paths, neither one is correct or incorrect. It's just a decision that they make. So a lot of it becomes driven by whoever the decision maker is, what they just decide they want to do. Some people will say, I like to just keep a bunch of personal cash because I like the feeling of safety. Right. I like knowing that I have a bunch of money available in case shit hits the fan, which is totally fine. So we go, okay, what what amount do you want to have saved, or what amount do you just want to be able to sustainably pull personally after all of the other expenses and things are covered and taken care of? And then we look and see, okay, where are we at? Pretty much similar. It almost follows the same sort of process of, what's the largest mortgage you could qualify for, and what should we do here? Of, okay, how much do we want to pull out? How much do we want to leave in the business? What's our risk tolerance is one that kind of plays into things as well, in terms of, okay, what do we do with the cash? Because you've got people that range the entire gamut of, I am extremely risk adverse, which means staying in cash means you technically can't lose money. And then we have those that will throw large sums around willy-nilly because I think some of them just get off in the rush of gambling, but they're looking for something else, or the deployment. It's more about actually the act of doing it, less so the kind of the return. I think I'm meandering a little bit with your question. um a lot of this starts once we've met the core fundamental principle of, we are cash flow positive. That's step one. Or not step one, that is goal one. That is the fundamental that has to be achieved before anything else can be considered. If
Yep.
we don't have that, then there is no other plan for what to do with any of the money, or another business endeavor, or buying your competition, or anything like that. If you're not cash flow positive, you do not have a sustainable business. None of the other stuff, the business is not going to be around long enough to make anything else matter. Your runway is going to run out. Then once we have cash flow, we have positive cash flows, consistent, sustainable positive cash flows. Then it really is just whoever's in charge of what they kind of want to do with that, depending on if they want to do new business endeavors. If they're planning on an acquisition, then you're going to try and figure out, okay, what's this going to do for us? We're going to take this money. What is our goal of doing this? Do we just want to have a division because then it's better for other sales things, or we're going to take this by another division because then we can, that has a really good, I hate using this word because it sounds so business speak, but synergy, synergistic practices. I hate that. I hate the word, but it is the most apt in this context. Does this other division or this other business have good synergy with what we have going on, and will help sometimes maybe just add redundancy or a buffer, or strengthen what the business does so things stay more and more sustainable? Or do they just want to go invest in other businesses? I've got clients that have very profitable businesses that are doing local local community investing. So they have kind of a main company that is providing a lot of the funds available to them as the owners, and then they take those funds and then they will either buy other businesses or invest in other local businesses to help other people kind of accomplish what they want to do, and provide some of that funding because they find that rewarding. And I think the direct answer to your question is, it really depends on who I'm working with and what their
Right.
their particular goal is. And then our job is to figure out two things. One, how do we do it, slash can we do it? And two, does it make sense to do it? Does that
Yeah.
kind of make sense?
100%. And I think you've given people inspiration, at least if they haven't thought of that before, to, like you said, with goal number one, cash flow positive. And then from there, identifying the best ways to use that cash. And the reason I asked that question was sort of a lead in to my next one, which kind of turns around one you asked for me, but with a little bit of a spin, I guess. So, based on those things, what for any business owner who, hasn't up to this point really looked at any of this stuff, like you were describing earlier, what would be one metric or one thing they can immediately go out and look at that would help, or what would be, the first place that you recommend a business owner start immediately?
So I'm going to hit it from two different angles. The first will be from the perspective of somebody who does not have any accounting system set up and wants to kind of take those initial steps. And then the other one, and this is actually the kind of quicker answer, is because I've seen this happen, business owners, businesses that have accounting functions that are working and they don't look at the reports. So if you're in the second group of having that infrastructure in place, and you haven't looked at it and you're listening to this, go look at your fucking P&L and go look at your statement of cash flows to see what's going on. If you've never looked at that, A, what are you paying them for? And two, why are you not looking at the performance of the business when you have that information available? I have seen that time and time again of, I think this has come up in earlier episodes, people that say, well, I'm not good with numbers or I don't understand what this is. Okay. Do you think you just stop at that point? Is that what you've done here? Is it, well, I don't know how to read this, so I'm not going to do anything with it? Because reality is still going to kick you in the teeth if you're not making money. If your P&L and your cash flows are giving you the information for how the business is doing and you're not looking at it and things aren't going well, that is only on you for not looking at that stuff. If you have somebody providing those services and you don't understand the numbers and they can't explain it to you in a way that makes sense for you to understand your own financial information, then you need to find somebody else to explain it for you. I have onboarded clients that will tell me, I had a bookkeeper that's been doing my books for years, but I looked at the reports and, the most they would ever say to me is, what do you want me to categorize this as? And then the business owner's going, I don't know. I thought that's what you do. And that's the extent. Here's the PDF. They look at it and go, I don't know what this means.
Yep.
So then the first thing we have to do is sit down and teach them how to read a P&L so that they understand what the fuck is going on with their own business, because it's your business. It's not my business. I look at my business. I look at my numbers. I know how to read my numbers. I know how to read my numbers very well. I know where all my numbers are coming from. But if you got your business, you don't know where your numbers are coming from and you don't know what those things mean, well, that's almost like not studying for a test in school and then wondering why you failed. So if you're not looking at that stuff, or you're you're working with someone who can't explain it to you, well, let us know, because that's what we do. A good part of our jobs is basically training clients, teaching, and taking accounting and money and making it make sense for whoever we are talking to. That is our job as the financial professionals.
100%.
Now, if you don't have shit, well, we're going to have to, first we're going to have to get a little quick and dirty here to figure out what's going on. So if you've got nothing, right, you got no structure, no nothing, you got a bank account, you got credit cards, you got a dream, right? Easiest way to kind of see how things are going is go into your online banking and first just look over the period. What is the balance in the bank doing? Are you going up and down, and it seems to be bouncing off a particular number? Are we kind of trending up and things are getting kind of better and better and better? You look compared to 6 months ago and you've got half the cash available as you are now, and that will give you a kind of a starting intuitive understanding of what is going on. Look at each statement that you get from your bank, and we have looked at a shitload of statements. We'll tell you deposits and withdrawals to the account. And you can look at those and basically start to figure out how much money went into the account, how much went out. And if you're anything like a lot of business owners with that level of structure, those two numbers are probably going to end up looking the same. So if you're not taking money out of the business and those two numbers are starting to look the same, congratulations, you're spending everything that you're pulling in.
Mm-hmm.
You aren't actually building an asset, you're spending all of your money. And that's why you're sitting there going, I feel like I'm working really, really hard, but I can't tell if I'm actually making progress because you're spending all of it. Once you see that, and then your next question is going to be, well, how do I know when I'm spending it on? That's usually the point where you need to contact one of us so that we can help you get things together and figure out from your statements, your credit cards, all of that. Put the accounting together so that you can see what's going on with the business. You can look at those reports. We can train you on how to read a P&L so that you know everything that's going on and can understand what it is you're actually doing and see the numerical representation of your own behavior. And then we can do the fun stuff of trying to figure out what's going to happen next month, the month after that, and try and make it so that you could buy that $1 million house that you've always dreamed of.
Love it.
And I think that's probably a good wrap up point at this point, as
Yeah.
we're starting to push an hour talking about cash flows, which we could probably talk for multiple. Well, I think this is probably a topic we should revisit periodically as we
Yeah.
work through things. So if anyone
Easily
listening to
another
this,
hour could be spent.
considering the amount of meetings I have on a monthly basis just talking about cash flows with clients, we could talk a whole lot more about cash, not even
Yep.
anything else, just cash.
Well, I
But
think
if
that's it for me, man. You got any wrap up
uh,
points?
honestly, no. I think everything's probably been covered during this episode that I would want to say here at kind of a high level. If anyone's listening to this and has any additional questions, wants some additional insights, anything like that, if you're listening on Spotify, you can always leave comments on the episode. If you're watching this on YouTube, first off, for anyone who's made it to the end of the episode, we appreciate you. It is a hell of a thing to listen to two CPAs talk about anything for almost an hour. So, as always, anyone who makes it to the end, we really appreciate you. If there's anything we can do to help you out, let us know. Leave likes, leave comments, subscribe, all that good YouTuber shit. And we will see you all next episode.